Palantir stock is down roughly 20% off its all-time highs in the previous week. Now, I've been warning investors that Palantir stock has been overvalued for some time, so I'm not surprised by this 20% drawdown. But what do I think about Palantir stock now? I'll give you my updated recommendation for Palantir. I'll share with you my proprietary discounted cash flow valuation model, which highlighted that Palantir stock was overvalued, and I was able to avoid this 20% drop in valuation. I'll also share with you the reason why Palantir stock is down, and I'll update my recommendation and let you know if this is now a buying opportunity on the dip.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one of the reasons why Palantir stock is down this week is because Citron Research, which is a short seller, took aim at Palantir's valuation. The research company said that Palantir pointed out that after OpenAI's latest funding round, it is valued at roughly 17 times its sales. Palantir stock carries a price to sales multiple of nearly 7 times that of OpenAI. Imagine that Palantir stock is 7 times more expensive than OpenAI, which is arguably one of the fastest growing companies in the artificial intelligence space, with the biggest competitive advantage, with the biggest upside, more so than even Palantir, which has incredible upside itself. So Citron believes that this valuation is not rational. And I would agree with that. I don't know, rational or not rational. I don't like to make those conclusions, but I do agree that Palantir stock was overvalued, and I've been saying that Palantir stock is overvalued for some time now. I've shared with you my research suggesting why I felt it was overvalued. So Citron points to Palantir's price to sales ratio. I've also been looking at Palantir's forward price to earnings ratio, which before this drawdown, Palantir was trading at a forward price to earnings of around 250, the highest level this stock has traded for, going all the way back to January of 2023. Now, I've been bullish on Palantir stock. I had the stock rated as a buy when the valuation was lower here around 45 and 50, right? But I started talking about Palantir stock as being overvalued when the valuation started approaching 100. Okay, that's when I started talking about the valuation being overvalued. And of course, it has grown since then. And so I've taken a lot of heat on my Palantir recommendation. And even a few weeks ago, when I made several videos about Palantir stock following the company's earnings, I reiterated my feeling that the stock is overvalued. And even in the comments section, I got a lot of negative comments there. People attacking because I wasn't rating Palantir stock as a buy, that somehow I was being foolish by not rating the stock as a buy. When I was looking at it on the valuation perspective, comparing it to the performance. Now, I have been saying that for the previous over year and a half, maybe closer to 2 years, Palantir's performance has improved dramatically, and so it deserves a more premium valuation than it deserved in 2023. I agree that a forward price to earnings for Palantir stock at 40, that would be very undervalued at this point, given the improved performance of the company. But a forward price to earnings between 60 or 90, I would feel a lot more appropriate with Palantir stock than a forward price to earnings up here around 200. To justify this valuation at a forward price to earnings of around 200, its revenue growth will need to continue accelerating, not just remaining where it is now. It would probably need to continue accelerating, with profit margins also expanding and not remaining the same. And those, I feel, are unlikely to persist. Given the competitive nature of business, given how so many companies are trying to follow in Palantir's footsteps, they may not catch up to Palantir, and they don't need to. Just the fact that they observe the success Palantir is having, they're going to develop more products and services to compete against Palantir. And so that'll put a little bit of a lid on uh, Palantir's prospects looking ahead, as these smaller rivals will start to chip away at the company's opportunities while offering a lot lower prices to offset some of their competitive disadvantages against Palantir, which is at least 2 steps ahead of the competition. So another way I saw Palantir stock as being overvalued is using my proprietary discounted cash flow valuation. I updated this again today, and in almost every time I've updated my discounted cash flow valuation for Palantir this year, I've increased the price, the intrinsic value per share. And it's because the performance keeps improving. So it justifies an increase in the intrinsic value per share. But if you notice here, my intrinsic value per share for Palantir is now $44.89, up from around $41 yesterday. But the current market price, even after this big drawdown at $154, is still well above my intrinsic value per share calculation. So whether I look at this on a forward price to earnings basis, on a price to sales basis, on a DCF basis, and I've looked at this from every which way, the stock just looks overvalued. It's a great business, one of the best businesses right now, and it deserves a premium valuation to be sure. But the the premium valuation is overdone, in my opinion, at these elevated valuations. So even after this drawdown, I don't see this as a buying opportunity. I just see this as the stock price coming back down to reality a little bit and letting valuation actually come in as a factor in what investors are willing to pay for the stock price. Because even my valuation includes very optimistic forecasts. In fact, I'm forecasting that the company's free cash flow will increase from $1.9 billion in 2025 all the way up to $35 billion by 2035. So I'm forecasting an almost 20x increase in the company's free cash flow over the next decade. And I'm forecasting that will continue growing even beyond this point at a rate that's above real GDP for the foreseeable future. So I have very robust forecasts for Palantir stock between now and the very, very long run. But even incorporating those into this valuation model, it still showcases the overvaluation of the stock. So that's why I believe the shares are down. It's just a valuation story. The stock price had gotten ahead of itself, and I still don't think it's at a point which makes it reasonable to buy. So I updated my rating as well. Not only do I keep track of the discounted cash flow valuations for the companies that I follow, but I also keep track of my rating on these stocks. And I had Palantir stock rated as a hold. And I updated that recommendation today. I don't think this stock is a buy. I would need to see a much bigger drawdown in the share price. I would like to own this company, but not at these prices. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.